The craziest shit in the world is that people want to buy a house and do not have a bank account.
It is a white dominant male profession.
And the faster you turn the paperwork, the faster you close.
It's up to you to let them know, hey, I mean, sometimes you have to ask.
Are there loans that you don't have to put 20% down?
We got to do something to get the buyers engaged.
Hey, podcast world, this is Chris Robinson.
Rayvon Matching.
Teresa Graham.
And behind the camera is
Chris Taylor.
You can go ahead and peek in. Come on, man. Come on in. Oh, you know, hit the camera.
Don't hit the mic.
We're with the Dreams and Keys team out of Louisville, Kentucky. Seminole Realtors is our brokerage. We are doing a podcast. We decided as a team last year to put a podcast together. And this is the first installment. So we finally made it. We're going to be drinking a little bit. So cheers. Shouts out to our tequila. They brought us, they sponsored a nice little bottle of Reposado, so we're gonna get into it. So we had to bring the queen, right? We had to bring the queen
Yes.
of mortgage lending in our city, in the state. I call her the motherfucking GOAT because she been in the business for a long time. And we're just going to pick her brain about the business, what's going on currently in the industry. And without further ado, Miss Terry Knott, Stockton Mortgage.
Thank you. I just feel just like the queen that you said that I am.
That's right.
That's right.
Which you are.
I feel so special for you to reach out to me and be your first podcast. So thanks again. I've had the opportunity to work with you all, and I am just, again, so excited.
Let's get down to it. So,
All right.
how long you been in the business?
I have actually been in the business going on 30 years. I wasn't always a mortgage loan officer for 30 years, but I started from a business co-op, didn't know anything about mortgages.
Right.
Went to school at EKU, had a good time, pledged Alpha Kappa Alpha Sorority
Okay, shouts out to AKs.
And my mom said, bring your butt home. So came back to Louisville, went back to the mortgage company, which was Calgary and Miller at the time, said I need a job because I've got to pay for school. So they helped me. They actually gave me a grant. So I was their warehouse clerk and the receptionist. From there, again, just being surrounded by all that, talent, and everyone looked like they were successful. I was like, I need to know more about this business. So at that point, I went from a setup person, from a setup to the processor. And once I processed, I said, oh, Lord, they do all the work. It's time for me to be a mortgage loan officer. So I did, I'm glad that I went through the steps because it made me a stronger mortgage loan originator.
Okay. So basically, you done started from the bottom. You work from like the ground up. You know, like all aspects of mortgage, correct?
Correct.
Okay.
Correct.
So let me ask you this, and anybody can chime in with questions at any time. What do you think has been like your biggest challenge? Let's just say as an African American female in the business, what's been your biggest challenge?
I would say the biggest challenge is, especially starting now, it really wasn't that many, African American female mortgage loan officers. So, getting people to understand that, again, I had a business degree, and a lot of LOs don't even have a degree.
And for you all that's watching, LO is loan officer.
Loan officers
Yes,
don't even have a degree. So just getting that respect from some of my real estate partners that then referred other real estate agents to me to let me know I had like a niche with the Kentucky Housing Corporation. A lot of people didn't want to do those loans. They said it's a lot of work. So I would just say that basically just getting that respect that, hey, it is a white dominant male profession. But women can do it too.
Right.
Yeah.
Is your clientele skewed toward a specific demographic, or I know with me and my real estate business, and I think everybody here could say the same thing. Like, I don't want to be known as I just do African American first time home buyers. I do everybody. I do
Right.
wealthy people.
Right.
Second home buyers and forever homes, first time, white, black, yellow, green. We service everybody. We service the community.
Right.
So were there any like hesitations from clients that you tried to get that was kind of, did they think
No,
that you
but,
couldn't get the job done for some reason? Or-
Right, right. I think more from some of my real estate partners thinking, oh, she just does first time home buyer or she does harder loans. So I would just get that, but I'm like, okay, I can do a regular conventional loan.
I
with
can
an
do that
800 credit
$1 million.
score. Right. Work with I have worked with doctors, things like that. Just knowing the knowledge and the growth that I have, it's pretty much open to everybody. Like you said, I'm not targeting a certain demographics or whatever, but because when I started out with helping first time home buyers, I just get a lot of that, clientele.
Right,
And just being in the community and everything.
right. You got a question, Teresa? Seemed like she's ready to ask a
I
question.
just said I understand what she's saying.
What do you understand? Talk about it,
Yeah,
Teresa.
talk about it.
I'm just saying when you start out doing something, people might kind of attach you to that.
Pigeonhole you.
Right.
Right. Exactly. Because
That's just what they know. They know that you can deliver, but at the same time, they don't let you deliver on something that might be a little bit easier,
right.
smoother process. So,
Right.
It's up to you to let them know, hey, and sometimes you have to ask.
Right.
Hey,
Right. Because
you have to ask for that business.
I know we was talking, we went to lunch, and you said you had the, was it the bank statement loan or?
Yes. Mm-hmm.
I never knew you had bank statement loans
Right.
after
Right.
all this time. You know what I'm
Exactly.
saying? So
Exactly.
you just don't know till you ask, right?
That's right.
So as far as like the business, like how are interest rates right now? Let's get
Okay.
into the meat
Let's
of it.
get into the interest rates. They are coming down, everyone. Believe
And
it
the-
or not.
And
But they're still
what's
not
the
gonna be
reason
3
for
or
that?
4.
What do you think is the reason for that? Is it the administration, the orange guy? Or?
Well, once it gets to 2%, I think that's when we know it's the orange guy. But
Right. I mean, it has. I feel like at this point it has to be like another pandemic for the rates to drop.
Right.
right, exactly. It's all about affordability, and everything else is so expensive that we've got to do something to get the buyers engaged. Right now I think they're coming out with other products to help with affordability. I know just within the communities, everybody's coming up with some type of program, community based, and just again trying to make it affordable. But right now, I will say the rates, because last year they were in the 7 and 8s. I'm doing a lot of refinances at 5.875 right now. So
Okay.
they are coming down. And I just think they're probably going to be in the 5s. I just don't really see that 3%. Again, because again, it was historically low rate.
Mm-hmm.
Not right now. I'm just listening.
He said, "I'm just here chilling."
No, I'm just listening.
So
Let
you
me
don't.
ask you all something.
Yeah.
Okay.
So what do you think the market is doing just from last quarter to now? Have you seen a difference in inventory?
I think depending on price point, houses are moving a little bit faster. I think like over the 650, 700 points, taking a little bit longer to sell.
Yeah.
I think the 2s, the 3s, and the 4s are selling. Some, you probably get it under like I have 2 houses that went under contract. One was in the 200 range, one was like in the 300 range, and they went under contract in one less than a couple days, one in 2 weeks. So I think it's depending on the price point.
Yeah.
And what about closing costs? Are you seeing that your sellers are willing to pay some closing costs?
Yeah.
Yeah,
Yeah.
I definitely.
Especially,
Think, yeah.
what you about to say?
I was gonna say I definitely think it's more of a buyer's market because sellers have all the equity, but I feel like buyers have a little bit more leverage as far as sellers wanting to sell their houses, like as far as concessions and things like that.
Yeah, I definitely think that. I mean, they're not gonna give you like 20,000 in closing, but they'll be fair and I mean, sellers out there may do like 5, 6, 7, 8, something like that, depending on like how much they're getting back off of the sale of the house. So
And
yeah.
I see that all my sellers that I had last year, they were willing to pay something, mostly, the 3%.
Mm-hmm.
Like I
Oh, you
had
talking
some,
about on the agent commission?
yeah,
Yeah.
my investors, they're a little bit more like, no, ask them, would they take this? You know what
Oh
I'm saying? 'Cause
yeah,
they
the
know that
investors,
I'm
the
like, they,
investors
right,
trying to
they
squeeze.
out
The
about,
wheel and
they
deal.
trying to get their money. You know what I'm saying?
But you know what the
Like,
crazy
right.
thing is? Like with the investors, it's like they trying to squeeze blood out of a turnip, but you might as well, if you want to continue that business relationship, especially with the other agents,
yeah.
you might as well just chalk it up and give them the 3.
Yeah.
What's it like
Right.
$1,000, $1,500 difference?
Yeah,
Right.
Yeah.
So, but I mean, I get it. Everybody's trying to make money.
I feel like in my last deal, it was one of those situations where it's kind of like we were at a standstill. I feel like if the seller wants to get the deal done, he's gonna do what he has to do to get, or she's gonna do what they have to do to get the deal done. You know.
Because most of the time, depending on what price range you're in, the buyer needs that money.
Mm-hmm.
You know, they cannot afford to pay their realtor.
Right.
I
You don't want
mean,
to lose a deal over $500 or
Right.
something like that.
Right.
So,
Which is
let me ask you this: what do you
Yes.
think that buyers are misunderstanding about the market?
that they need to wait. That is the
Mm.
biggest. This is the best time to buy. And you all know this because
Yep.
there's no competition.
None.
You just told me that sellers are willing to pay closing costs. Okay. So in July and when everybody decides they want to go ahead and buy, guess what?
And what's
You got
today? Today is
competition.
February what?
February the 17th.
Yes, 2026.
2026.
We done told y'all here first live.
Right. So in July, you're going to have multiple offers. So guess what? Even if their rate did go down to 5.5, the houses are going up and you're going to have to make a better offer than the other person. So actually, you're not saving any money. So today is the best day to buy. This
there's
time.
so many down payment assistance programs out there. And
Take advantage of that money.
take
Right.
advantage of that money. I'm
First
all
come,
about,
first serve.
some of
That's
them. you
right.
don't
Say it
even
again.
have
Say it
to-
again for the church can hear you.
First come, first serve.
Once it's gone, it's gone. You gotta wait another year.
How do y'all feel about Trump? He's replacing the previous Fed chair with one that he, I guess, has more influence over. So, like, do y'all feel like that's going to affect the interest rates as far as going down, or you think,
I think it's hard to really know, but I think that he's trying to lower everything
Yeah.
for the rich people, so we can get some benefits out of that. You know what I'm saying?
Yeah,
I mean, he is crazy.
Yeah.
We'll say that. I mean, he says things out of his mouth that you can't believe, but when he's thinking about it, it's like, what was he trying to be where you could claim income on your income tax? Was
Yeah.
it credit cards or something? It was something that we haven't been doing. Or the interest, that's what it was, the interest on the credit cards.
Oh, okay.
They can't go over a certain percentage. Right. So that's like really kind of helping people. You know what I'm saying?
Yeah,
For
yeah,
real.
yeah.
I mean, so
Yeah, well, the only thing about it is if those rates did come down too low, come down low,
Yeah.
Let's just say 3-4%. But if you don't have a job, then
Right. Like, if the economy isn't, yeah.
Right.
Yeah,
Definitely.
it's just-
Definitely.
yeah.
I think it's all over the place. I mean, I think that it is what it is, and we just got to deal with it.
Yeah.
And
Right.
regardless of who's in office, Biden, Harris, Trump, whoever's in office, they're gonna do something that people don't like.
right,
Right.
Somebody ain't gonna be. It ain't never been a perfect president.
right.
show me one, and I tell you, you smoking something. You need to pass it to me, but there's never been a perfect president. So somebody, the left or the right, the center, I'm a center guy, but the left or the right, somebody's gonna be upset about what they do. You just gotta deal with the situation as it comes, So what products do you all offer over at Stockton?
Of course, we have, like everyone else, FHA, VA, conventional, RHS. But some that I like to kind of hit on that I see that a lot of lenders don't even touch is our 203K loan, where you can actually get the property in the area that you want and say that your buyer doesn't like the kitchen or they don't like the bathroom. Well, they can make it their own. If it's $10,000 that we need to do the upgrades, then you can put that on top of your loan, okay? Which is, again, and use your own contractor. So you can make it the way you want it and still be able to get the house of your dreams. That's one of them. We do have, we are the #1 lender in Kentucky Housing Corporation that has the $12,500 down payment assistance that doesn't require you to have any special inspections or anything like that. Easy peasy. Also, we have the bank statement loan. We have the DSR. We have all the products for that person's situation. Okay.
So I heard you say 2 initials. I heard you say RHS and DSR.
Rural housing.
Can you tell everybody what those are?
Well, rural housing, you have to purchase a home in a rural area.
And it's outside of Jefferson County, or is that outside of? How's that?
Are there rural areas in Jefferson County that somebody could potentially buy?
I think it's right there at Bullitt and
Shepherdsville,
maybe.
Shelbyville.
Yes.
Yeah.
Okay.
Yes. Mm-hmm.
And so what is?
And then the investment loan is for
DSCR.
the DSR. That is basically to help an investor qualify based off the income that they're making on the home. So we're not even looking at your W-2s or tax returns. So.
And how long have you all done that loan? Because I saw that on another something on YouTube about that, probably about 4 or 5 years ago, and I was like, I never heard of this before.
Mm-hmm. And I think that, again, we have a ton of investors, so it's just making the time to learn your products.
Okay.
And then we all, shoot it out there and see how it works. But yeah, we've probably had that a while also.
Then with the DSCR loan, it's still 20% down, or is it?
Yes.
Okay, yeah, that's why.
So are there loans that you don't have to put 20% down?
Yes. So just depending on, again, which product or whatever, but we do have a conventional loan that we use with Fannie Mae and Freddie Mac. We're direct with them where we can do 3% down, and we give a $2,500 grant, depending on your income. Okay.
Now, do you work with a lot of self-employed people?
I haven't, but I did here lately. I've done a lot of the bank statement loans.
And
that
can you
I've done
kind
in
of
my
explain
career.
to the people that's listening what
Right.
you
So
mean
say
by
that you're a barber and your tax person, which I think you should always have a relationship with who's doing your taxes, but they want to make sure that you're going to get money back at the end of the year, so they expense a lot of things, which, for instance, if you say you made, $50,000 a year gross receipts, but then they expense 30,000 of it. Well, as a loan officer, and I'm doing working on your file, I see 20,000, and that's all I can use as your income annually. But with the bank statement program, we don't even get your tax returns. Okay, we're going by your actual bank statement, so everything you're depositing, and then we average that, and that's the income we can use. So we know that you're making the money, but that's an outlet to where you don't have to use the actual tax return.
See, I think the biggest issue is that, everybody wants to be private, but you can't be private when you're buying a house.
Right.
I tell my buyers all the time, the faster you turn the paperwork, the faster you close. And be as transparent as possible, because they're going to find out.
a lot
Please,
of
I tell my
times-
mom, I'm on your side. Let me know.
We want to close because if y'all don't close, we don't get paid. So,
a lot of times people have money in the mattress.
Ooh,
oh yeah,
And,
ooh.
our grandmothers used to do it and grandfathers. They didn't put their money in the bank. They didn't trust the bank.
Right.
You know what I'm saying? So I know we use banks a lot more now, but what are you supposed to do when you've been putting money in your safe because you want to have something on the side just in case, stocks go down and it takes all your money? You know what I'm saying?
Right. So you need to communicate with your mortgage lender or your real estate agent, and we have to season that money, meaning it has to sit in there for a couple months so that when we get that new bank statement, we don't see that you deposited $5,000.
Right.
Okay. So we got to educate them on what to do when you have mattress money.
Yeah.
Yes. Another thing that you could do is they could get a gift from someone, which gifts are easier now, guys. They are
really?
easier.
Because I remember
you remember
you had to get the
bank
letter and they
statement,
bank
the letter.
statement, the person giving the gift was like, hold on, give my bill. I ain't buying a house. So
I used to call it the auntie gift that you're not gonna get, because if it was an auntie that had to give the money, it's like, oh no, I can't give you my bank statement, or they
Right.
mark out the account number,
Right.
And you need
right,
that.
or they gotta pray over it, and when they pray over it, it's a no.
right.
So
what's the change?
So now, basically, it's still from a relative, but you can now wire the funds and straight to the title company.
Wow.
So I don't need to see your bank statement.
When I first bought my first house, I got a gift from my uncle, Mr. Lee. He had the shop on Broadway for years and years and years, and he had to write a check for a gift for me
Mm-hmm.
for my house. That was 1997 when I first bought my first house. So
Yeah, they probably want everything from him.
I don't remember. And
A
maybe because he
blood
had a
test,
business,
urine.
maybe because he had a
Everything.
business has been.
I
in
mean,
effect
if
for
the
a while.
money's in the account, that's all good. But who wants to have to ask your relatives for their bank
Right.
statement?
Right.
You know.
So
Yeah. So that's
So is there a magic score that
well. That's one of. I
is
would
there a
say
magic
that's one
credit
of the
score that
myths.
somebody should have in order to buy a house?
No, there's not a magic score. I will say that a lot of people feel like they should have, at least a 680, 700, which that's good. That is good to have, but everybody's situation is different. I've had where somebody had a 580, and they had a 580 only because they didn't really have any debt. They just had 2 trade lines, and then they had a collection. So basically, and the trade lines were installment loans. So installments only a third of the whole credit pie. So therefore, their score would never move. They had to get a revolving account, which credit cards, you all know that's half of the percentage that you have to have. So I could still do that 580. I didn't get an automated approval when you run it through, but I was able to show that they paid their rent on time and their utilities, and then they had that one trade line that I could use. So they still were able to buy a home. So just because you have a 580 or under 620 doesn't mean that you can't purchase a home.
So what happens? I guess let's kind of quickly go through the steps. So we refer you a buyer. They want to get a house. So then what happens?
Okay, so I would talk with the buyer. Basically, I'm kind of old school. Okay, I've been doing it a while. I like for them to come in the office if they can. Only because I think sometimes clients don't ask questions or they feel like it's a dumb question. I like for them to feel comfortable asking the questions and telling me those things that might pop up later. They feel more comfortable going ahead and letting you know, hey, I had a old repossession, or I have this money over here. So we do the application. I let them know exactly what they need to bring in, which is basically 2 of your most recent pay stubs. If you get paid every 2 weeks, get paid every week is 4 of your most recent pay stubs. Your W-2s for the last 2 years. If you're self-employed, your tax returns for the last 2 years. 2 of your most recent bank statements, and let's talk about bank statements. Bank statements can kill a deal, okay?
Really?
All right.
So I love to have those bank statements up front and to go over it with my clients because of deposits and Klarnas and Klarnas and Cash App. Those are the new things. That's cash, so we cannot use that. Okay, so if that person needs to bring money to close and say needed to bring 2,000 and they got 1,000 in Cash App, well, I can only use the 1,000 that I can document. I can't use the Cash App. Okay, and then Klarnas are like like railway, like they have payments that are due, and we have to count that in their debt to income ratio if they don't pay them off. And I have had a buyer that had over 40 of them. It about killed me.
You have.
Oh my God.
But the balances were still low though, so she could easily pay them off. It's just the fact that
She got into a bad habit. I tell you what
It's like rewriting,
craziest shit is,
check
and
cash.
the craziest shit in the world is that people want to buy a house and do not have a bank account.
Oh yes.
They got these rush cards, these cloud bank accounts that mortgage lenders ain't gonna accept, or especially underwriting.
Well, I was gonna mention Chime, but Chime has gotten better. Only thing that I seen was a problem is the lady had the money in her account. My client had the money in her account, and the day of closing, she couldn't even get the money. She had to go to like a sister bank of theirs to get the money, so it delayed our closing.
And I tell my buyers, man, like if we find out that they don't have like a brick and mortar local bank account, they need to go get one.
Because think about it. I mean, if you got $1,500 in there, you can't even get to it.
Right.
That's scary, and we need to educate our buyers on that.
One time I could speak for me personally, but one time I had to, I was closing on a house in Breckenridge County, and they had like a Chime account, and the bank needed to see that it came from this account, and I had to go take the check and go to another bank, get the money, and bring the money back, and
Yeah.
it's just get a bank account from a local bank.
Some people
Yes.
can't though, because they done messed up in the past. But usually credit unions kind of will accept people on the edge of, I can never have a bank account again, at least for 5 to 10 more years.
Yeah, sometimes.
Till I get myself together and I'm grown. You know what I'm saying? So it's like, some people can't. And they feel like the easiest way to do it is to go to something that's not really connected.
Yeah.
It's not gonna let you get overdraft charges. If people like that, because I feel like overdraft charges is just kind of like to get money out of you. If I don't have the money and I don't let it go through, and why am I charged for it?
Right.
You know what I'm saying? And then I didn't even know that I had a charge because I might not look for a couple of days. And
Right.
then I'm charged because they keep trying to put it through and y'all keep charging me for it.
Yeah.
So,
I mean, I think, everybody, those institutions are in it to make money.
For
You know what I'm
sure,
saying?
for sure.
They're not going to be watching your money for nothing.
Yeah.
So I feel like you got to understand how the game is being played.
but they not
The
watching
game
your
ain't
money for
the
nothing
game ain't played for
because
us
they
to
get
win.
interest off your
Right.
money. So they not watching your money for nothing.
Right.
Yeah.
Yeah, but though, like you said, those fees on those accounts, they'll ding you if you ain't like. I know, like on one of my accounts, my personal account, if I'm below X amount, it's a $15 service charge. I'm like,
Oh,
really?
man.
Wow.
Thanks, BB&T.
I was like, call them out.
BBC.
Truest. We need to talk.
But with Cash App, I can lock my card and can't nobody get in it, which I heard somebody's doing that now.
But you
Is
can
it
lock your.
Chase?
But-
I mean, yeah, like Chase, PNC, you can lock your
You
card.
can lock your card,
especially if you got
but
the
they
app.
still will charge you.
PNC doesn't.
They don't.
They don't.
I
So
can lock
let
my
me
card.
ask you, can you make a phone call to Cash App?
Cash App ain't got no representatives.
No, they got that login
Oh
like.
my God.
You got chat. You got to chat to them. You
That's
can't
the
call
one.
them.
They're like, good luck, homie.
You
Right,
can't. But I'm not
okay.
doing no big business on
Okay,
Cash App.
I feel like
okay.
You know
banks,
what I'm
banks is
saying?
definitely
Yes.
like not the most ethical, but I mean, it's just certain things you got to do when you
It
want to
just makes
purchase
it
a home.
easier.
There's
Like-
other options like credit unions, and you know, it doesn't have to be a traditional bank, but you got to have something, you know, brick and mortar. I feel like.
Yeah.
Yeah.
When I first got Cash App, my son was in college, and he didn't know I had Cash App. I forgot where I got it. And I said, "You want me to Cash App you the money?" He was like, "Cash App? Yeah, you know how to do Cash App."
He was excited. Yeah, keep sending me $50.
Right. Ordering me pizza and doing
So
all
once
that.
we get approved, then we, you know, get the pre-approval letter, go
Oh,
shopping.
yeah, we kind of got off with the bank
I know.
statements. Okay.
I'm gonna reel
Sorry
you
about
back
that.
in.
Okay.
Okay.
We get pre-approved, get the letter, then we go shopping. This is what buyers need to understand. I need y'all to really understand this. We are not, as real estate agents or realtors, are going to waste our fucking time showing you houses that you can't afford. Nor are we going to show you a house if you don't have a pre-approval letter. It's like going to Ruth Chris Steakhouse, ordering a nice filet mignon, and when they said they bring you the check, you ain't got the money to pay for this filet mignon, right? So at the end of the day, like,
But it's not only for us, it's for them too, because we don't want them to get their hopes up high. Because once
Correct.
you get knocked down a couple of, you want to stop. and
Kills your
quit.
morale. Yeah.
So it's not just for us, but it is for the buyer because they lose things so easy sometimes that you're like, why are we stopping?
Yeah.
This is not, you know.
and I think another important thing is that, you know, as an agent, it is our duty to discuss, like, you know, payments, interest rates. You know, a lot of it, you know, we work in coordination with the lender, you know what I'm saying, our LO. But I think the most important thing is to make sure they understand these payments, you know, because you don't want nobody to be house poor. We always talk about that all the time.
Yes.
So I think that, you know, you got to have, sometimes as a real estate agent on our end, we got to have tough conversations with our buyers. Like, I know you like this house. I know it got the marble floor and the rain and shower and the walk-in closet, but are you prepared to, because I don't want nobody calling me back a month later like, man, I don't want this,
Yeah,
man.
Chris sold me this
Right.
house.
Yeah.
Right. I
Right.
told him I couldn't afford that house.
Right.
And like, wait a minute. Yeah.
So I think transparency on everybody's end, the loan officer, the buyer, and the agent is crucial. You know what I'm saying?
And it's good that if I were tell you something about a lender that I worked with in the past, I feel like I'm not trying to stir you anywhere.
Right.
I know the products. I know what they can do. I know certain things about this lender, and they're going to communicate with me up front about any issues that they see. Whereas some other lender may just be trying to get a paycheck, but some lenders, you know, really care about the person, and they're going to set you up for success in the beginning.
That's right.
What do y'all think is the biggest fear, I guess, around purchasing a house for new home buyers? Y'all feel like it's the monthly payment, closing cost, or like, what do y'all feel like is the
I think it's always the payment
monthly payment?
for first-time home buyers.
Yeah.
And of course, the closing costs. you know, if you can get some assistance or if you can get help from the seller. But I think that payment, which sometimes, you know, I understand that you have a certain budget, but sometimes people don't like the payment, period, from what they're qualified for, and they want to go up. But then you're like, no, you just told me you're not comfortable with this payment. Even though when we're approving them, they may be eligible from what we see to go up higher.
Right.
But at the end of the day, if they have in their mind that they don't want to pay over $1,500, then that's what we need to focus on. Because if you're not really comfortable with going to 16 or 17, and then I'm having one of you all, okay, well, actually they can go up higher, not really comfortable, then we're putting them in a situation where for failure.
Right.
Right, but okay, so this is my thing. Nobody wants to be house poor, right? But I think that buyers sometimes have a false sense of reality of what they're getting for that amount. Like,
Right.
if you want if you want to live out in Middletown, right? That payment is gonna be $2,500, $3,000 a month. It ain't gonna be $1,500.
Right.
You know, $1,500 is gonna get you in a certain area of town. You know what I'm saying? Unless you find a condo out in Middletown
Condo,
that
definitely.
you know that may need some work or whatever, a situation like that. So I think the main thing is that, and that's our job as agents and also loan officers, to explain to people like, yeah, you're pre-approved. We would like for you to go up, but if you want to be in this price range, this is the area of town you want to be in.
Right.
And 9 times out of 10, they don't want to be in that area of town. Like, even before I start this search, they'd be like, don't put me here, don't put me there, don't put me.
Yeah, like that.
We're here all the time.
All the time.
But you only want $1,200 a month payments. Well,
Right.
guess what, buddy? You're gonna
Right.
be in this part of town. You know what I'm saying? So I think that if they want to be in a specific area and want to spend that, and want to live in a specific area, maybe they may need to do some self-reflection too, like get another job.
Our people need to start with starter homes, okay? A
True,
starter home,
but a lot of people don't want to do it. People,
Right.
Yeah.
a lot of
That's
people
the
don't.
problem.
It's about managing
I
expectations.
got a perfect example of that. My daughter just bought a house just like mine, her first house she bought.
she came out the bag. Like, how much was it?
I can't tell.
I mean, but you can say the range.
It was mid fours.
Right.
Now,
That mean
sold a house.
400.
I didn't-
Thou wow.
I didn't sold a house, had a starter house before, which my starter house I felt like, well, I had one before, you know, back in '97. But I'm talking about most recently, I felt like my starter house was a good house. It was a great house for me. And then we sold a house to move into this neighborhood, and she just came right out the bat. And I was like, the whole time I was thinking, wait a minute, because not only is she my daughter, she's my client. So I'm trying to tell her, I'm more on a parent side, like, wait a minute. You gonna do what? You know? And she's like, she did it. But I was scared the whole time because I'm thinking she can't afford this.
Right.
But, you know.
But I mean, people that want to afford the $300,000, $400,000, $500,000 houses off the first bat, you know, unless you have an income, you got to figure it out.
Yeah.
Now, I ain't saying like you got to go out here and start slinging crack and no crazy shit like that. But I feel like American people are hard workers. That's one thing we can always say. American people has always been hard workers. There's nothing wrong with getting a secondary job, asking for a raise, moving up in your company, because sometimes it just ain't the right time.
Right.
It's all about timing too. Sometimes it just ain't the right time to buy. You know what I'm saying? So do you have conversations like that too with your buyers?
Yes, I do. And basically, another thing is just getting back to budgeting. I mean, because you can fit it in there. You can
Right.
cut out some things like,
Right.
you know, shopping on Amazon all the time or, You know, that Starbucks coffee that you keep getting.
DoorDash and food.
You can come up with
Man,
a budget.
it's a lot
we
of
can come up with
times.
a budget when we
It's
want
a
to do
lot of
something.
times that buyers price themselves out because they buy these luxury vehicles.
Yeah.
Instead of buying something to get you to point A to point B, you want the bucket seats, the heated, cool, and then want the Hemi.
I want it
You
to
living
ride,
out of
but I
your
can't
Hemi.
have it.
You know what I'm saying? Like, but what they don't realize is like you're living out of your car now
Exactly.
because you got $1,000 a
You got
month
this car
payment.
you pulling up to an
Yeah,
apartment.
because you want to go. You know what I'm saying? Like,
You
okay,
need to get that house, then get that car.
right.
You know what I'm
Right.
saying? Because
Ain't nothing wrong with little Prius and
I mean,
then.
apartment living is expensive.
Oh,
Yes.
I mean,
Yes.
you're paying 15 to 3.
That's a house payment.
That's a
All
house
day
payment.
long.
You could be paying into yourself. You're paying somebody else's mortgage with that
Right.
money.
Right.
Right.
It's,
But a lot of people, a lot of times buyers too, they're afraid to take that step because they can always get somebody.
lease.
Yeah.
Yeah,
It's less
or
of a
somebody
favor.
can always fix. Well, such and such gonna
Yeah.
fix this
Supposed to
refrigerator.
fix
That's why you
Yeah,
have
right.
Can.
You got
Yeah.
slumlords
You got
too.
slumlords too.
Yeah.
And then I
Yeah.
also feel like a $1,500 mortgage is gonna get you somewhere different than a $1,500 townhome. Like you can live in different areas. Like you could,
can.
yeah, because you can't live in Middletown like you said with a $1,500 mortgage, but you could live in Middletown with a $1,500 rent though.
Right? Yeah, of course.
Yeah.
That's true, but you still pimping backwards. I mean, come
I agree.
Well,
I
say it
agree.
again.
come
I
pimping
agree.
backwards.
Yeah, I agree.
Because you're still paying into somebody
Yeah.
else's dream.
I agree.
Right.
Yeah.
Right.
Because these apartment complexes, I go in one area and I'm like, what? When did this get her? You know what
Right,
I'm saying?
right.
I understand everybody is not supposed to be, don't want to be a homeowner, just like college ain't for everybody. But go to trade school then.
Yeah.
You know what I'm saying?
Right.
Yeah.
You got to do something to get yourself up there.
I agree.
And
Yeah. And like Chris was saying, sometimes it's just the timing. It could be that you do the starter home at $200,000,
Yeah.
build some equity, move in 2 or 3 years, take that equity, buy you something else, rent this out,
yeah.
build that wealth. You know, it'll come. It's just a timing thing.
A
You
lot
gotta
of
have
of
plan.
people don't understand the long play versus the short play. Everybody wants to think about now. You know what I'm saying? Like people don't understand like this real estate game. It's a 20, 30, 40, however long you on this
Just
earth
think-
play.
Just
Right.
think about this. It's just like my grandmother passing away with life insurance enough to bury her. Her mother passing away with life insurance enough to bury her. Her mother passed away, might not have had life insurance, might have had life insurance, passed away, and left that. It goes by your mindset, how you was raised and how you was taught. You know what I'm saying? And what your people left you. Because a lot of times we don't think about leaving our kids nothing because nobody left us nothing. You know what I'm
Yeah.
saying?
And you gotta break the cycle.
You gotta
Yeah.
break the cycle.
I feel like
Right.
at this point in time, especially like the way America is now, like it's a I mean, I ain't saying it's an equal playing field because you still have some undertones and shit, but it's better than it was 1940.
Right.
You know what I'm saying?
Right.
Like it's 2026, right?
Yeah.
And I mean, even though we got orange guy in the office acting a fool and shit, that we still, you know, everybody still has an opportunity to make it. It's all about, you know, how bad you want it, how bad you want to work. You got to put in work.
And you do.
You gotta put in the work.
Break the mindset because I was scared for my life for my daughter getting this house. But just
Because you
her
thought she's
kids-
going to move back in with you.
No. But her kids are gonna have more opportunities and they gonna know about more things because that's the way they grew up.
That's
You see
right.
what I'm saying?
Right.
Oh, yeah.
Right.
Yeah.
They, my grandkids don't eat beanie weenies. they want to go the Stormy Crab and stuff. You know what
Right,
I'm saying?
right, right.
When
Yeah,
my
yeah.
kids start eating crab legs, we start making them at home. We not going out to eat this. But
Right.
my daughter takes her kids out to eat this stuff. You know what I'm saying?
Right.
So it's just a mindset.
Different life, yeah,
Right,
mindset,
right.
lifestyle,
So
mindset.
they need
Yeah, of
those
course.
jobs that's gonna carry that on.
But sometimes though, my thing is this though, like, yeah, you know, everybody want to live, everybody want to go to Ruth Chris every Monday, but sometimes you gotta sacrifice. People need to understand sacrifice too.
and saving money.
Right.
And I know we get like 100 hours and we lose our mind. I mean, we get these taxes. My grandmother
Oh,
would say,
my
I
God.
can't believe they give y'all all that money. You got 3 kids. You getting $10,000 tax return.
Right.
And guess what? We going to the mall.
Right.
So,
So instead of taking that money and building on your credit,
Yeah.
so what's some credit building things that people can do that can help them when they get pre-approved?
Yeah. So some of the new things that are out as far as what can be deleted, still remember to ask that creditor when you're paying them off, will you delete it completely off my report? Instead of it saying paid collection or paid charge off, there are a lot of companies that will delete it. And if you delete it, it's like it's never there. Okay, so that's gonna raise your scores up. Again, with credit cards, anytime you get down to 30, 10, 20%, whatever it is, that's going to raise your scores up. But again, we got to, continue to just be on top of what's going on with the administration and things like that, because I am hearing that they're going to be changing how they even look at that with the credit cards.
And doctor bills, don't even count doctor bills.
Right. So
hardly,
doctor
do you?
bills, even if they still show up on your account, it's not affecting our approvals. So you don't have to pay them off. But even with those, you can call them and say that it's $500 and you give them $250. You can ask them to delete it off your report. Okay, just have a clean report. So I always tell my clients, and I have a list of creditors that will delete them that I can share with you all.
Oh, that'd be good.
Yeah.
So is this even when it goes to a lawyer or a one of those companies that take
What, like
whatever the
Lexington Law?
collection.
No,
Oh,
I'm talking
Lord.
about like it goes to a lawyer as far as the debt has went to a lawyer.
Oh, like the charge off part.
Yeah.
Yeah, it doesn't matter if it's a charge off or a collection.
Okay.
You just gotta ask them.
Okay.
What let me ask you this. So, we get the pre-approval, we go shopping, find a house, get it under contract, make it past the inspection period, and then the appraisal comes. What's been some appraisal fears?
That the house doesn't come in. Well, I would say in the last few years, I haven't seen too many of those where, whatever the sales price is, that it doesn't appraise for that. But I have seen a lot of repairs that kill deals. But at Stockton, we have what we call escrow holdback. Okay, so say the seller's like, I don't have the money, I can't do it right now. The buyer, is not going to do it. So you're trying to hold this deal together. So say it's, it needs carpet, or if it needs, what's a good repair that comes up all the time?
Flooring, plumbing,
or something.
yeah.
So you would get that bid from that plumber, okay? And we'll add that into the escrow holdback. And then you have like 30 days to get it done, okay? So basically we'll have the appraiser go back out to make sure, it's done, but that saves your deal. Okay?
you can save the deal.
Or you could do the renovation if it's so many repairs. Then we could do, the 203K and flip that appraisal to now a 203K appraisal where they're going to wait and get the bid from the contractor. We send that to the appraiser and they adjust. And sometimes it, adjusts the value.
So what? Okay, so going into that, what kills deals at the last minute?
Oh my God.
I got like a 10 commandments, but I think on my end, what I could say from my experience is buyers going out and start buying a bunch of shit
Yeah.
and don't wait until closing.
That updated bank statement.
Right.
Woo. Or they just decide to quit the job.
Yes.
And then think that you would know
And
about
you
it.
don't think you're gonna buy this?
They go buy a car to go in their new garage.
Right. So
Yeah.
what's the rule of thumb to buyers?
To buyers.
I
Just-
tell them, and I'm very frank, don't do shit until this is over with. After you close, go
That's
crazy.
Yeah.
But don't have no crazy transactions. Don't buy no new car. Don't get nobody no loan. Keep paying your bills on time. Let's get through the process. Because, I mean, normally, it takes you about 30, 45? Can you do
Right.
it sooner than that?
Yes, again.
Yeah. So
Let's
sometimes
try it.
we can get you in and out 15. But we all got to be on it. You know what I'm saying? Like, everybody got to be on it.
Right.
But
That's right. You're exactly right. Just don't do anything. Just keep it simple. Don't start transferring money over here because you want all the money to be together. I see that happen. Like, well, no, I just put it all over here. So when I get my check, no, don't do that because now you got to give me another bank statement. I got to see where the money went, and and going back to the basics. So it's just more work. But yeah, like you said, just don't do nothing.
sign
If
that
somebody wants to
paper.
give you a gift, they know you're closing, tell them to wait till afterwards if we don't need it,
so what's some of the things that because I feel like that the relatives could probably, all the agents could probably agree with me on this, especially when you represent a buyer. I feel like the underwriting department is the devil. Like,
Private
they take a long
detectives.
time, takes forever. We
was
trying to
calling-
close.
we was
They
calling
still
NCAA.
looking over documents.
Right.
So
Right.
what are some things that they're looking for that buyers don't know about?
Well, I think they're always looking for the same things. I just think that we need to prep our buyers more so it's not these additional conditions.
Because a lot of people's all about privacy. Why are they asking for this and blah, blah, blah? And
Right. So, I mean, of course, the underwriter's having to meet guidelines because if they miss something, guess what? It's on them.
comes back on
It
them.
jeopardizes their job. So it's just like when you have a condition, we need to make sure that as a loan officer that we're covering, okay, well, what if the underwriter says wants this or that? So go ahead and ask for that information because one condition that you send in can lead into what? Another condition.
Right.
And another condition. So,
How do
and
you-
it could be that they're not telling us the whole story and then it, of course, blows up.
so how can they strengthen their application when they turn it in? What's some things they could do?
One of the things is to go over that bank statement. I have them do letters on what those deposits are. Anything over and beyond your payroll or whatever type of income you have to do an explanation. Okay? Or if it's a large deposit, you need to document it. Okay? Your pay stub. If you say you're working 40 hours, the pay stub says 35 hours, I don't want to turn that in because you tell me you're working 40 hours and our pre-approval's on 40 hours. What happens? So just,
40 hours.
get back on, if they said, oh, well, they let me off today. No, don't take off. You need to work your 40 hours so that we're good, for hourly people. So just
I'm the
things like
first
that,
person
just
ready
being
to
on
leave
top
work.
of when you submitting it with anything, when you're submitting something in, you want to be as prepared as possible. So with all of us as a team,
Right.
you're telling them this, I'm telling them that. Let's just make sure they're prepared so that when they turn it in, it's not that many conditions.
Right.
That's the best thing to do.
So once we get past appraisal, everything's good. Or we may have to work through a situation if it comes back lower. Then we get the closing. Now they're in the house, right?
Mm-hmm.
So,
Oh, you gotta talk about the celebration. When we get the closing, we
oh yeah,
celebrate.
well, yeah.
We celebrate.
Hey, we popping bottles.
Okay, don't pass that part up.
Hallelujah.
Yes,
We
we made
through.
it.
So,
Yeah.
what are some things that they should keep in mind? I mean, I feel like home buyers need to understand, especially first timers, is that once you purchase it, like, it ain't no rental no more.
Right.
Like, it's important to keep your house up, keep your landscaping good, keep your house clean,
Right.
make sure you fix things that need to be fixed, get a home warranty.
Yes.
9 times out of 10, I'm going to negotiate a home warranty in your first year.
Yeah.
But after that, you're on your own.
Right.
So what's some things that you would suggest to them, like over time, they should look into doing?
Well,
Once they
thing-
purchase the house.
once they purchase is to protect their investment.
Right.
Okay, which means a will, whatever type of will, get with an attorney, so that you have that all. Because we talked about generational wealth. Well, if we leave it to someone, we didn't have a will, then guess what? The courts has got to go through it. Then you got to get the family together, and a lot of times that becomes a mess. So protect your, investment, and then as far as like you're saying, keep up everything. You're the landlord. You're,
Yeah, you are the landlord. It's
you're
your
the
house.
landlord, yeah.
Right.
Let's see what else, and then just taxes and insurance. Let's talk about that. That can go up on your payment. So a lot of times our buyers panic and think that the interest rate or something changed on the loan. Well, you can always still shop around for homeowners insurance because in Kentucky it's all over the place. So just letting them know, calm down. It's okay. You just might have to shop.
Right.
And then taxes. It's good and bad. Taxes go up. That means your property value is going up. But if you feel like it's just way out of hand, then you can go downtown and do an appeal. Okay.
Now, do you think that what's your pros and cons about refi? Me, I did it in my household, and I wish I would never done it because we still in that house. And instead of starting the clock over, I would have been almost halfway done.
Right. So
So
I think it depends on if you just early on, your first 3 years, okay? Say your rate was 7% and now it's 5.8. Well, you haven't even put anything into principal. You just bought the home, okay? Whereas if you had been in there 7 to 10 years, for one, I need to think about, am I going to stay in this home for 30 years? Do we plan on moving? It just has to make sense for your situation when it comes to refinancing.
Yeah.
So as far as like long-term wealth building, what do you think is like the long-term strategy once you buy that house? Is it to try to pay it off fast or just to...
Write it out.
Well, been in this industry as long as I have, when I first started out, I was like, all I heard was pay off, pay it off, pay it off, pay it off as soon as you can, okay? But then there's been times that people have paid their home off, okay? All that equity went down when the market crashed. So all their money, you know what I'm saying, what they had at first, you can't even get it. It's gone. So I just think it's where you're at in your life as far as, is this, it's still a tax write-off. Do I really want to pay it completely off? Or do I just want to make sure that it's still my investment that, if I need to get cash out or whatever, but I'm not big on just pay it off as soon as you can. Use it as any other investment. Of course, you don't want to take, well, we ain't, as a lender, we're not going to let you take all your equity out, but use it the way that's best for you. And then as far as leaving anything to your kids, well, sometimes we have to be careful with that. Have you had that conversation with them when you leave it? Are they ready to take on either a payment, or do they know what to do with this wealth? Are they going to sell it? We want to make sure that they're ready for it too. So we need to educate whoever we're leaving it to.
Right. Prep them.
Yeah.
That's true, because so many people just let their mother's house go.
Right.
And
Didn't know what to do with it.
Yeah.
Didn't know how to make a payment. Didn't know that the tax bill's been coming because they paid their taxes outside of their mortgage payment, and now you owe
Right.
all these taxes and things like that. So we still need to focus on protecting the wealth if we're leaving the wealth.
Mm-hmm.
exactly.
Yeah. And I think we should leave it with a payment, because you want them to be responsible.
Right.
You just don't want to give them anything, because people don't always appreciate it when it's just given.
Mm-hmm.
So my kids know I'm leaving a payment.
But so when it comes to, let's just say I passed away, my kids had a payment on my house, what do they do at that point?
So it depends on if you have a will or not.
So if you don't have a will,
Hmm.
well, tell me both, actually.
So if you don't have a will, then you have to go to probate, and then you've got to go who's going to be the executor and how all that in place. So that's something that you would need to talk about, like who would be the child that you would put in that position. And then they got to check and see if there's any outstanding, liens and things like that. It's just a longer process. And then as far as selling, you all could probably help me with this. Once you do that, isn't it like 90 days before you can actually sell it? Like you have to go through the whole process. 'Cause I've seen it where we've been
talking
in
about with
contracts.
probate?
Yeah.
Yeah, it's a time period with probate.
Right. Right.
But it's like,
That's
does
why
the older,
get
does
your
the
wills.
person have
Right.
to put the mortgage in their name? That's what I'm saying. When it's a loan, does the child have
It
to
just
get the
depends.
loan in their
So
name?
if one of your kids says, I want to take this on, then they're going to have, that person's going to have to pay them out. So they could do it either selling it or do it as a refinance.
But I'm just saying, like, I passed away, I don't have a will, and it's going, if I have some money out of that house, it's gonna go to my kids.
Mhm.
But I'm saying, if they wanna take over the mortgage, don't they have to get the loan in their name?
Right.
So
right.
they have to be pre-approved for a loan and all of that
Mm-hmm.
in order to keep that house going. That's the thing, though. What if they can't?
Well,
Put
they
the-
might have to sell it.
They might just have to sell it. Okay.
Mm-hmm. But we know
You ready
got
for the
them
rap?
prepared, so we know that one of them will
Well,
be
I'm
able to
just
do it.
saying, a lot of
Yeah.
people don't have the means,
Yeah.
to do that. And
You ready
We
for
done?
rapid fire?
Oh, we still okay.
You ready for rapid fire?
why you clapping
What
at
is
me
it?
like that?
I'm
Don't
like
miss
this, cause
mine.
it's time. I need everybody clapping with me. Like, what? We towards the end.
Yes.
Are you ready for rapid fire?
All right, I guess. Let's see.
We're gonna ask you a series of questions. We want quick answers. You ready? Do you need to take a drink? Shouts out to
I
our
need to take
sponsor of the tequila, Numbre One, out of Louisville, out of Kentucky.
Okay.
We want to say thank you for the bottle of the Reposado that was presented to us by a lender friend of ours. I'm sorry, I had to, something got in my eye. Sorry, cameraman. But The owner sent this bottle, Alex Raimundo. Thank you, Alex. We appreciate you. And I like to try that anejo. This repo, I need that anejo. All right? But back to Miss Terry Knott.
Yes.
Yes.
Rapid fire. Are you ready? We're going to ask you a quick series of questions. Give us your best answer, your quickest answer off top of the dome. Are you ready?
Yes.
Best loan program out right now.
Best loan program right now is Kentucky Housing Corporation at 5.75, 30-year fixed, get $12,500 in down payment assistance.
3.5 down or 5% down? Which one's better?
3.5, 3.5 down. Oh, I'm sorry.
Which
were you
one's
asking me a
better?
question?
3.5 down or 5 down? Which one's better?
3.5 down so that you can save some of your money in case you have any emergencies.
Adjusted or fixed?
Fixed, baby, unless you like to gamble. And I don't.
Refinance or wait?
Refinance, if it makes sense. If it's at least a point difference, I would refinance if it's been within the first 3 years.
Biggest credit mistake?
Not letting your loan officer see your credit and go over it, and you're paying off things that you didn't need to do.
And what's the prediction for the rest of 2026?
Prediction is that interest rates will be between 5.6 and 6.5, and we all gonna be rocking and rolling by summertime.
All right. All right. Well, I'm Chris Robinson.
Rayvon Matching.
Teresa Graham.
We're with the Dreams to Keys team, and this is our first episode of the Angry Realtor podcast. Hey, if you like this episode, I feel like a podcaster now. If you like this episode, make sure you like, subscribe, and follow our YouTube page, the Dreams to Key page on YouTube. All right? We want to thank the queen, the GOAT, Miss Terry Knott, for joining us.
Wow, you are the greatest.
If people want to connect with you, what do they need to do?
Please call me at 502-939-8374 or Knott, KNOTT, at Stockton.com. Again, 502-939-8374. If you didn't know, that is 939 Terry, Terri. Thank you.
Okay.